So yeah, like I said, we're gonna start very, very soon. Just hang in there. So far, please drop me all the questions you have. It seems like I have a small group today, which is perfect for you guys because you can then start asking questions. And this will also give me an idea of maybe where I should take this class after this presentation. All right, so I have a few questions already. How can you identify strong support and resistance? Someone wants to learn about trend lines and channels. And someone says, can you explain margin and why we need it as we trade? Those are the questions so far. Keep them coming, guys. Keep them coming. All right, perfect. So we got one more question saying, how do you choose the stock to invest in? These are all very good questions. So I'm gonna leave them towards the end. This is a beginner's class, of course. So I'm gonna need to break down things. It's a short, sweet presentation. It should get all the critical information in you. All right, so with this foundation, you should be able to at least understand the way we talk in Forex, have a way around the platform, and basically just have a deep understanding. Then you can join me on the Thursday class, or my Thursday classes would actually make better sense after this class. So yeah, without wasting time, let's get it started. So you can all hear me, right? I'm not talking to myself here. Right, that's awesome. That's awesome. I'm getting those yeses. So let's go on. So before we start the whole thing, I have this thing which I call the millionaire mindset. Something that's helped me as a trader when I was starting up as well. So the way Forex started for me, it was all hyped up, you know, like I could make $1 million tomorrow or make $1 million by month end type of thing. So I figured that, okay, if it's true, then we should be seeing a lot of millionaires out there. And as I went through the journey, I started realizing that this is not true. Forex is not something I can just wake up the next day and just decide I'm gonna do, and then within a week I'm already highly profitable and I'm already making tons of money. Now listen, my statement can be argued in respect to the fact that maybe you have a very, very big account to begin with, but without the skills, that account is still useless, okay? So when I started the whole trading thing, I thought maybe, check, I'm gonna put in 10,000 Rand and probably by the end of the year, I'll at least have $500,000, because all these guys are estimating over $1 million Rand, you know? So I decided, you know what, let me try this out. And I deposited 15K. Within a month, I had lost about 70 to 80% of it. So I had only $200 left to my name. All right, from a whole $1,000 to $200. This was devastating. I mean, I was supposed to be a millionaire in the time that I spent in the market, the way it was explained to me, but no. Truth was that I almost blew that account. And so I stopped, and it was around the November times. And I was still a student back then. So what I did then, I went back home and I decided not to celebrate my December and actually study the market. And I downloaded a few books. So I looked up some good traders, guys that I know have been in the industry for a while. And then I started looking at the charts and what they're talking about. So as they're trying to explain the chart, they'll start talking about things like harmonic pattern or support and resistance or divergence and all of these funky names which or funky words which I didn't get and what they meant. So that made me go and research and Google those terms, and those terms came up with books. All All right, just to realize that these are all like strategies that are happening, that are out there already, that you can go and study and then perfect. So I went and I studied throughout the whole December and January, and I started trading again in Feb. All right, with that $200 that was left. All right, I traded that money for about 5 months, and I was already sitting on around $2,000 worth of profits. Okay, it was actually more than that, but I don't want to overexcite everyone because it came with big risk. I mean, I didn't even know what I was really doing. All right, I had a lot of knowledge, a lot of background, and I could see the markets clearer than I saw them the previous year when I almost blew that account, you know. And I started making money rapidly, and I got to a point where my money was enough. Now I can tell you that 10,000 US dollars is an account, guys. That account used to generate around $1,000 for me per month. All right, that means per week, sometimes I'd have like $500 worth of profits in my account. And as a young guy with no big responsibilities, no house, no that was a lot of income that came in from trading. And I realized, you know what? I don't need a lot of money to actually live like a millionaire. You know? Because I believe that a millionaire is a person actually that doesn't worry about what they're gonna eat, about their health, about their education, about their kids' education, about getting clothes, house maintenance, car maintenance, transportation, whatever it is that it costs to live your lifestyle. This is a millionaire. So if you have that amount of money, so that every month you don't need to worry about what am I gonna do now? Do you understand? A millionaire is a person that doesn't have to worry about that. They're always worrying about what's next. That's a different mindset. That's a relaxed person. That's someone that's not chasing after money. Okay, so that's my definition. That's how I started seeing things. I mean, I've got $1,000. I live in an apartment that cost me around $4,000, and from there, that's including electricity and water. So I've got like 10 to 12K left to spend, and I still have 100K in the trading account. And that doesn't change. Every single month, I've got 100K in my account. Whatever profits I make, I'm gonna chow them. So what can you do? I'm gonna leave this question with you. What can you do with about $1,000 profits per month? All right. Now this is Forex, man. Making 10% on this market is very possible. It's extremely possible. So 10% of $10,000 is $1,000. What can you do with $1,000 every month? What can you do? So that's the question. So let me go on. So this graph that you're seeing here is showing you averagely what people have to spend on in order to keep their lives going. So in essence, you go and work for money. So you spend time hustling, running business, doing whatever you're doing, all right? Which costs time. And then that time is converted to whatever your net worth is. So how good are your sales skills? How good are you at work? How good are you as a professional, as a doctor, as whatever you are, whatever money you're making? These are the things that are hitting that money every month. They're chowing that money. These factors you're seeing here are all the factors that are killing your money, whether it's your DSTV, whether it's you going to go get some clothes. You know that you're about to get a lump sum on the 25th or the 15th or whenever you get paid, but literally within an hour, a few minutes, that money gets decreased. And it's usually more than half. Usually people don't have half of their money in their account after deductions. Now, I might be lying about some people. Some people know how to sort their money issues out. But I'm saying in most households, there's not enough money. Otherwise, we wouldn't have such a high debt figures in the country. All right. So my millionaire mindset, I'm saying, hey, listen, write down what you're spending your money on, because every month it means you need that amount of money, that specific amount of money that you calculate, including your housing, your electricity, your water, your transportation, your airtime, everything that you're spending your money on that you know you can't escape. Write it down, know that figure, because I'm telling you, that's your goal. That's the first amount that you need to get to so that you can be financially free. And that's how they say it, financially free. I think financial freedom is when you know that your lifestyle is sorted. Now, can your trading account do that for you? Can you build an account? Can you build your skills to a point that your account gives you enough to sort out that number that you're gonna come up with? Okay? So you need to come up with your number. If my number, let's say for instance, is about 10,000 Rand, that's the apartment, that's food, that's everything that I'm gonna need, so that I don't have to stress about how the hell am I gonna survive the month. If that's my number, then I need to multiply that number by 10 so that I can figure out how big my account has to be, so that 10% of my account can pay for my lifestyle, so that when my salary comes, it doesn't have to pay for expenses. Listen, I worked for that money. I worked for that money. Now that money can't get here and then go elsewhere to go pay for housing, pay for water. Yeah, I need those, but can I get money to work for me so that it pays for my expenses, so that I don't have to spend all that time at work working for the same expenses? Isn't it irritating to have the same problem every month? So yeah, honestly, that's really what I believe. I believe that there's a figure, and literally it's not a million. You don't have to be already a millionaire to live like a millionaire. That's what I'm trying to get to here. That's what I'm trying to get to. So in order to live your life, you have that number that you need to achieve. And your account has to be at least 10 times bigger than that amount for you to actually to come into the market and be at ease, to trade with confidence, to know that no matter whatever amount you have in your trading account will stay as that amount or grow, but not go down. And that's what I'm talking about here. So when you have that amount and you've got 10 times more than that amount, you know that if I make a percentage of that amount, I already have something sorted out. I can pay for water, I can pay for my transportation or something. That's where it starts. Before trying to break your account and make multi-millions, you need to break the cycle of you having to pay certain expenses over and over again. I want you to get to a point where your trading money is killing off these expenses so that your salary can come back to you, so that you can make new decisions to your money. Or you can spend that money, you can reinvest that money, you know, the money that you're working for, and keep saving it. That's how a savings account works for me. I feel like the money that I work for should stay that amount or grow from there, all right? And then the money that money makes is the money that I'm supposed to survive on. Otherwise, I'll never get money to work for me. That's what it means. When they say money works for you, don't work for money and let money work for you. I think that's what it means. Can it pay for the simple expenses so I can see what I want to do with my money? So yeah, keep that in mind when you're going through the journey, and stay true to yourself. A lot of people are competing on social media. Listen, you don't even know if that guy placed that trade three weeks ago and it's only paying him now, right? Also, you never know how big their accounts are. Some of them don't even show you if the account is real or not. You know, so we end up chasing. I personally am a victim of this. You end up chasing dreams. It's like, no, man, Tabo can't beat me. Tabo made 10,000 rand today. I want to make 10,000 rand today. But your account is worth 10,000 rand. So that means you have to risk 100% of your capital so that you can make another 100. That doesn't sound like business to me. So I'm gonna put all my money in a trade. So when I blow it, when I blow the money, do you realize that it's gonna take 2 times the effort to get back there? Plus, I would have already lost around 80% of my confidence in the market. How do you move on? Sorry about that, I just had to get some water. Yeah. So let's go on. Let me not dwell on this topic too much. I talk a lot, guys. So yeah, what is the Forex market, right? So Forex, also known as the foreign exchange market, is also called the currency market. And it is the largest financial market in the world, right? So here I've got a graph that's basically showing us the volume or the volatility of the market, or what other people call the liquidity of the market. All right, so basically this is the trading amount per 24 hours. And I've had this picture for like 3 years, if I'm not mistaken. So this numbers could be outdated, these numbers could be higher even. Okay, so starting off the markets day, you have the New York Stock Exchange, okay, which is another financial market. So what this means is that Forex is not the only place where you could go leave money and let it work for you. There's many other markets out there, including the cryptocurrencies, which I want to show you where they are. Because when this picture was shown to me back in the day, cryptocurrencies did not exist, or they hadn't made enough trading volumes to make it on this list. But right now, you're gonna be surprised how big cryptocurrencies are, okay? So coming up first is your New York Stock Exchange, which is the biggest stock exchange in the world. Here in South Africa, we've got the JSE, the Johannesburg Stock Exchange. Basically, this is where you buy shares in companies, right? So if you're someone that loves putting money into companies, this is where you go, to the stock exchange. Now, the New York, being the biggest in the world, trades at $28 billion a day. So this is how much money is going through, buying and selling, decisions being made per day. So this means that they have to lose $28 billion. So $28 billion has to disappear in order for us to say that the stock exchange is a scam and it's fake, okay? And then it brings us to equities markets, right? Now these markets are generally the ones that deal with interest, right? We're talking about bonds here, we're talking about insurance companies here. So that type of business is called, it forms the equities markets basically. And they're trading at $190 billion a day. That's how much money is in there, right? It is then followed by your futures markets. Now I like to say this market is mostly about what Mother Nature gives us. So I'm talking about the oil, I'm talking about those cocoa beans, I'm talking about platinum, talking about diamond, baby. That's what I'm talking about. So this is trading at 430 billion a day. That's crazy. Then it's followed by the Forex market, trading at $5 trillion. I heard someone say that they reached $6 trillion per day. So in order for Forex to be a scam or to just disappear, it means over $5 trillion should just vanish. Now, I don't know how possible that is. $5 trillion has to vanish. Now, I promised you to show you where the cryptocurrencies are. All right. So to do that, you just have to go to Google, search coin market cap, click there. And right here, you've got the top 100 cryptocurrencies by the market capitalization. Okay. Here's the trading volume. So what I'm talking about is right up here. Look at this. How much is that? $95 billion. So if you're out there and you still think cryptocurrencies are fake, listen, it's only fake when this $95 billion disappears. You see, when that money goes, then that market has no demand at all. No one is willing to trade it. But right now, there's $95 billion that's moving around and you're not chowing it. So Bitcoin by itself is running around $26 billion a day by itself. That's excluding the other cryptocurrencies. It's not fake. That's all I'm saying. Now look at this $95 billion. That means the crypto space is bigger than the stock exchange space right now. Okay, maybe collectively as a stock exchange, they would be bigger. But all I'm saying right now is that they're bigger than the biggest stock exchange right now. So that's crazy. And then you've got Forex, as I said, which is already 6 times bigger than the second biggest market. And that's crazy. That's a massive market right there. So Forex is, I believe, is the best market to be in because the money is fluent. The money flows here. Okay? And I think some of the factors would be that the accessibility. It's so easy to access the Forex market nowadays. I mean, anyone with a phone or a computer can access the market. And they can link their bank accounts to a trading account like that. And that's what makes this whole thing beautiful and so profitable. All right? Also, this market runs 24 hours, 5 days a week. Now with the binary options, it can run 7 days a week. So this market doesn't sleep. Plus, buying into currencies is usually very cheap. It's cheaper than trying to go buy shares in Tesla right now. So if you go to the New York Stock Exchange, for a fraction of a share in that company, you'd have to cough up about $190 something per share. With the same money, I could buy a lot more rands or buy a lot more pounds. With that same amount of money, so I'll get more shares in an economy than I would in a company. And that's what I call true accessibility. I can decide to trade at night. I can decide to trade in the morning. I mean, the market is open all day long, all night long. Okay? So that's what Forex is, or what the Forex market is actually. So I'm seeing that some of you are not hearing sound. Can you all still hear me? All right, so a lot of you can still hear me. That's great. So for those that can't hear me, I'm sorry. So maybe you'll catch up. So I'll post the videos. Let's just pray that it comes out perfect and there's no issues there. So what is Forex all about? So it's all about buying and selling of currencies. Okay? The better word would be to say we are trading in a currency for another. So if you've got some rands and you want to buy dollars, you have to give the rands to someone and they need to give you the dollars in exchange. That's why we're saying we're exchanging currencies or we are trading in currencies. So this is where the trading comes from. So when I'm saying I'm trading something, it means I'm giving something away for something else in return. And that's what trading is all about. So I want to know from you guys. All right, so I want to see those replies. At point A, are you gonna buy or sell? At point B, are you gonna sell or buy? At point C, are you gonna sell or buy? All right, so when you type your answer, I want you to send at A and then give me your answer up or down. I mean buy or sell, B and so on. So I want to see how far you guys are. I see some pros here, eh? I like that. I like that. So most of you already have an idea of what we're talking about here, but keep them coming. All right, that's perfect. So here are the answers. So most of you have this already figured out. So we buy the market when it's down. All right, so buying just means that things are going up. Let me do this. So conditions for buying refers to an up move. So when things are about to go up, we want to buy them. So yes, everyone that said they want to buy at point A or buy at point C or buy at point E, you are basically saying that you're making money for as long as the market is moving upwards. All right? And those that say that they want to sell, they basically saying that we're supporting a market that should be moving downwards. Okay? So when you press the button sell, all you're saying is that I'm going to make money when things start going down like they did here. So when the chart starts going downwards, you're getting paid. All right? If you press buy and the market starts going upwards, it means you're getting paid. And the opposite applies. If you come here at B and you press buy, this means you're losing money for as long as this thing is going against you. Okay? So buying just means you're going up, selling means I'm going down. Now, right here on the left, you've got the United States against the South African Rand. And this is what I want to show you. When you're pressing buy, you're basically supporting the dollar. And then when you press sell, you're supporting the South African Rand. That's all it means. So if I press buy here, that simply means that I'm for the dollar and I'm gonna make money when this chart goes upwards. All right, so this means when this thing is going up like this, it means that the dollar is dominating the market. It's performing better than the Rand. So the Rand in respect to the dollar is weak when the charts are going up. Okay? And then at point B, when the market sells off, it means the Rand is dominating the market. It's doing better than the dollar. Okay? That's all it means. If I press sell, I'm going down, I'm making money going down, and I'm supporting the South African Rand. That's all it means. So if you've got another currency like maybe the GBP against the United States dollar, this simply means that the GBP, to support it, you have to press buy, and the charts have to go upwards. And if the charts are moving downwards, the dollar is dominating. That's all that buying and selling means. All right? And then there's some few more technical terms like your bullish market. Bullish just simply means this thing is going up. We call the buyers or the up movement a bull because when a bull attacks a person, I want you to imagine this. Whenever a bull attacks a person, it literally picks them up by their underwear and throw them in the air. All right? You've all seen when a bull attacks a person. You know, those Mexicans and they, what do they call that thing again? But you know what I'm talking about. All right. When a bull attacks you, it's going to grab you and it's going to grab you by the horns and just throw you up in the air. And this is what's this representing. So we're saying it's as if the bulls came and just knocked this candle upwards. All right. And then if a market is going down like this, another term to say would be bearish. All right. So this is a bear market. All right. I want you to imagine a bear. When a bear attacks, it literally stands up taller than everything and then strikes the victim down or the intruder down. So it's as if the bear stood up here at point B and just hit these candles and they just started falling and falling and falling all the way until the bull came in and just knocked it right back up and strike down, knock up. Okay, that's all it means. So if someone says, hey, I'm bearish on USD ZAR, all it means that they're supporting the rand and not the dollar, and they're only making money if that thing is going down. So if your friend tells you, hey, I'm bearish on USD ZAR, and you come in and you see a chart that's going up, you know that they're losing money. All right, you know that they're losing money. Now let's move on. There we go. Get off my screen. Thank you. All right, so we can come to a conclusion that Forex is just a battle between two currencies. And the one with the strongest economy at that specific time and period will move the chart in its direction. All right? That just indicates the strength of the currency at that specific time. It doesn't mean that the other country is trash. You know? It doesn't mean that you need a dollar-based account or a pound-based account. You can have your money in rand and still rip from the market, depending on where the market is situated. So if you know for this month the rand is going to be dominating against the dollar, why would you want to put your money in dollars? Or if you know that the Japanese yen is going to be doing something great and their currency is going to be gaining over time, why don't you have your money in yens? Why do you have them in pounds? All right. So literally, Forex is just a battle between two currencies. You can have your account in any currency you want. This is not the main point. The main point is when you get to the trading chart, what do you trade? Do you know who's strong and who's not? Okay? So of course, these things don't just move up and down by themselves. You know, the chart doesn't just decide, you know what, this week the rand is weak. Next week the rand is strong. You know, there's factors that we have to equate in that are always being monitored. So we've got things like your employment data. Your employment data. So this is a very simple one. Employment data refers to how many people are employed within the country. Now, each and every country in the world has to actually state those numbers each month. All right? Some of you've heard some trading lingo, know about the non-farm payroll and employment change. So every first Friday of each month, the United States would literally present their employment data, and traders go crazy over this news because then the dollar gets to shake. Okay, so obviously if the dollar comes this month and tells us, hey, listen, there's 50,000 people who are employed, we'll be like, okay, that's great for you, you know. Then the next month they come back and they tell us, hey, it now moved from 50, there's now 60,000 people that are employed. That is good news because they just created 10,000 jobs for people. Okay, So if more people are employed in the country, that means this country must be going somewhere. And what jobs did they give these people? So there's money flowing in the country. So it's a good indication that the country is doing well when their jobs are increasing. But if they came to us and they told us, listen, from that 50,000, there's only 40,000, buddy. So 10,000 people had to go home. Do you think the country's doing well then? Oh, hell no. All right. So we start selling the dollar at that point. We don't want the dollar. We wanna go buy whatever it's against. All right. Then of course we've got then the interest rates and inflation. All right. So your interest rates are basically what interest is the country giving to investors that are offshore. Say for instance, because I know South Africa has a high interest rate for offshore investors. So when a country increases their interest rates, this allows someone, let's say for instance, I live in Europe and I wanna invest my money in a bank, and I've left my money in the bank, but the interests are not doing so great for me. All right. And I then open my computer and I go search, what's the interest rate in South Africa? And it pops up that, listen, dude, you can make like 14% in the whole year if you leave your money in SA instead of leaving it in Europe. Listen, I'm gonna move my money from Europe and go invest it in South Africa. And that's how we basically attract offshore money. All right. Then this money is then used for something else in the country. Usually you guys would go and borrow that money and go pay 27% back to the bank. I'm just using logic here. Okay. So that's how interest rates work. So the government or the central banks get to then decide what the interest rate should be in order to keep balance, to keep the currency at check. All right. You then have your inflation. Inflation is basically why bread about 10 years ago was 6 rand and now bread is 14 bucks. That's inflation. I don't know, maybe the ingredients change. This is some super bread we're eating nowadays, but everything in pricing keeps going up. That's called inflation. So the central bank and the government use these two tools, interest and inflation, to determine or to keep balance of the currency. Okay? This is how it works. So obviously, if you're going to change interest rates, that would directly impact how much the rent is worth. Because if you drop the interest rates, it means we have less investors coming in. That should have an effect on your money. If you want to drop the inflation rates, which I've never seen done, only going up, they just keep increasing inflation. But if they were to drop the inflation rate, this means everyone would have more money because everything else would be cheaper again. So with the same salary you have, you'd be able to buy more things. So they control this. This is controlled by your central banks, by your government, and whatever economical decisions they make. All right? You then have the gross domestic product, the GDP. So this is like an overall performance of a country, including all the sectors. So whether it's mining, whether it's the information technology industry, whether it's the medical industry, whatever it is that the country is involved in and how business runs around, they're looking at whether the number or the profits that each of these organizations are increasing or decreasing. Okay, so if I go and read the GDP this month, I mean this year, and they're around like a billion return, and the next year I come back and it says 1.5 billion, this means that the returns have increased. The country is doing something better. They're attracting more money to them. So obviously I'd want to go in. All right, invest in the development of that country, invest in the companies in that country. And that's what the GDP does, and that's how it indicates to investors. You then have retail sales. All right, now a simple example of this is, you know for sure that in December, during the Christmas season, the festive season, there's a lot more spending than any other time during the year. So literally you're expecting, if you're going to go check retail sales month end of December, you'd find that you've made more money than you have made the whole entire year, because people spend more money. So retail sales are a good indicator of where the money is. So what does investors do is then they start looking into the retail sales. How well are the retails doing? Are they making more money? If they're making more money, this means that people are spending more money. They're not saving money, they're spending it. Okay, so this shows that there's money flow and things are good in the country. But if retail sales start dropping, this means people are not spending money. They'll rather be sitting on their money, saving it or doing something else with it, than go spend it. All right, then you start hearing about recessions and all of that. This is how they find out if we're going into a recession or not. Are people spending money or what? All right, then of course you've got political stability. I'm sure you all have seen with the elections here, the rand has been moving up and down. It hasn't been stable at all. We've all seen during Zuma's time what happened with the decisions he made, firing finance ministers. The rand didn't react so well to that. So that's already showing you where the money is. So political stability in a country also matters. So if we have a war going on, best believe your currency won't be doing well. So these are just some of the factors. There's many more, but usually if you go through your economic calendars on investing.com, you'd find that this is what they mostly talk about. So each and every country has to participate and give back this data so that we know how they're doing, so that we can make trading decisions. All right? And you don't have to be an economist for this, honestly. Literally, if I go now, let me show you, for instance, let me show you what I mean by this. So you don't need to be scared now. So, oh my God, I don't know how to read news. So right now I'm going on to investing.com. So I'm already logged in here, so I'm sorted. So right here it says economic calendar. So I'm just gonna click on it. So it then shows me what you see here. So I've set it so that I'll only see news that are highly volatile. All right. So I want like big news. I want something that's gonna move the market so hard. So if you chose different settings on the filters, it would show you a lot more news. So you can see news for the whole week. So I know this week, these are all the news that are happening. So let me open one. Here's the GDP. We're talking about the GDP. So the US on Thursday, the 30th of May at 2:30 in our time is releasing their GDP. So you just have to click on it. Okay, and this would give you an explanation of what the GDP is and how you should expect or how you should read the news, right? Then it says the usual effect is like this: when the actual, which is this, is greater than your focus, which is forecast, which is this, then that's good for the currency. Okay, so if we look at this one here, the forecast is 3.1. So people believe that it's going to move from 3.2 and go to 3.1. And on Thursday at 2:30, the United States will tell us what the actual figure is. And if it's higher than this means the States is killing it. All right? Just like here, it's green. So it says better than expected. So you already know what's this? It's today. The news that came out today at 4 p.m. were good for the United States. So you should be seeing charts moving in the direction of the dollar. And that's how you read news. So you don't need to be like an economist to go read this news, because I can just put my mouse here and it'll tell me, oh, good news. Then I can go back to my chart and do whatever I was trying to do there. Okay, so there's a lot more. There's like forexfactory.com, there's TradingView, my FX book. There's a lot of these websites. I prefer to use investing.com, obviously, because that's what I used as an example. All right. So here's our next slide. Who trades Forex? Who trades Forex? Now, before I start, guys, are you still with me? I get paranoid talking to a screen here. Are you guys still with me? Thank you so much. Thank you, guys. So who trades Forex? Now, these people directly impact what's happening to currencies, whether it's directly or indirectly, but they're attached to their currency, right? First on the list, we've got your central banks and government. So I already told you a bit about this, guys, that they get to decide what the interest rate is. They get to decide what the inflation is. So if they change those figures, this literally means that the currency is gonna shake, because they're either trying to attract more money towards them or release money from them. So when they make decisions, we want to know, because that affects how the rand or how the dollar sits. Okay, you then have the super banks. All right, super banks are like these big banks, your Investex, your FNBs. Listen, when these people make decisions, those decisions can impact how strong your currency is. I mean, just 2 years ago, we were suing the 3 major banks. If I recall, I know Absa was there, Standard Bank was there, but not to make accusations, but I know they were getting sued for doing something wrong or moving money from the country or something like that. I'll try and get you that article actually, so that I speak facts. But I know they got billed billions. They got billed billions. Not small money. These guys, if they make such decisions, you know that can affect the whole currency and how strong it is. If they all had to decide now, hey, let's store our money in Europe, or let's store our money in cryptocurrencies, that could shake the whole country. All right. We then have companies. I'll give you an example of this one. Do you think companies like Google, like Facebook and Microsoft, that made those top 10 billionaires, Amazon and all these guys? So if those companies decided to move, let's say Amazon right now says, you know what, I'm tired of operating in America, and Jeff is like, listen, let's move to South Africa. Do you think the dollar is still going to be as strong as it is when one of its biggest companies is about to make such a decision? Obviously not. Obviously not. So such big corporates influence how the currency is also doing. One of ours was Anglo Platinum and Lonmin. Our mining industry has a great impact on our GDP. So whatever decisions they make, if they decide to fire people or to hire people or to do whatever they want to do, that could directly impact how the rand is doing. And then you have retail traders. That's you, that's me, that's anyone with a phone and laptop trying to trade from home. And so I want you to look from the point of us here as retail traders. I want you to look at your competition. I want you to look at your competition and see how big they are. They're not even people. They are buildings. You're literally going against buildings. This means there are people in here who are trained and highly qualified to do this that you're up against. Who are you in this market? Guys, in simple terms, this is not our mother's house. I don't believe that our trades and our funds are moving the markets. We're not. The markets are moving us. These guys are market makers. Their decisions move the markets. They decide who's the bull, who's the bear right now by the decisions they make. So we need to learn what they're doing, and we need to know what they're doing. Because the only way we're gonna make money is if we're making the same decisions as they are. Because clearly they're moving the market. This is not my mother's house. I don't want to be here trading my last money, and I don't have great knowledge about what's really happening and how I can build a trading system. That wouldn't make sense, because my competition definitely knows what to do with the money. So yeah, let's take like a 2-minute break so I can drink my water. And can I have those questions? Can I have those questions? I'm still jotting them down. Probably I'll make a whole video about the questions and answering them, or I'll answer them if we still have enough time. Because I know I'm a bit of a slow talker, but I'm trying to make a lot of sense. All right, so it seems like there's no questions, so let's keep it going, keep it flowing. We've got currency symbols. So now we're gonna talk about the language and how there's how we basically talk in the industry. All right. So I think you've noticed that all the currencies have like 3 letters to represent them. So the first 2 letters are generally the initials for the country. So for instance, here you've got the US, which is your United States. And then the last letter will represent the currency, which is now your dollar. So your GBP would be your Great British Pound. Your NZD would be your New Zealand dollar. SAR would be Saudi Arabian Rial. And then of course, ZAR would be South African Rand. So we don't have the SAR, although we exactly that, because Saudi registered before us, obviously. So they owned it first. So you can't have 2 SARs. Okay, that's why we resorted to ZAR. Then the last thing I want us to talk about is pips. Percentage in point, pips. And this is the most important thing about this whole class. That's why I left it for last. This is why you're here in the Forex market, to generate and to make pips. Now, what is a pip? A pip is the smallest change in price movement a currency can make. Okay? The smallest change in price movement a currency can make. So in simple terms, a pip is a measuring unit that we use in the Forex industry. It is literally like saying liters when you're talking about something that's liquid. Saying grams for weight. Saying meters for distance. We're talking about pips. Guys, we're talking about pips. So you're not here to make money. Listen, money it's common. Money is an outcome. Imagine a petrol station that doesn't have petrol. How are they making money? How are they making money? So your petrol station, I come park my car, you don't have petrol. There's no way in hell you're making money from me. If you own like a butchery and you're selling meat, you have to weigh the meat and then charge the person upon how much your product weighs. So here grams equal money. So without the meat, what the hell are you selling me? If you own a taxi, you know you're charging these people for the distance. Someone that's going to Lesotho and someone that's going to a local spaza shop will not spend the same amount of money. on a taxi, that means taxis are converting meters into money. So no matter what industry you come to, there's a unit of measurement that you need to acquire in order to keep the business going. So for Forex traders, that's called pips. We make pips. We don't make money. We don't make money. We make pips. We then convert the pips back into money. And I'll show you how we do this. And that's the end of that presentation. It wasn't too long, right? So let me open a chart here. GBP/NZD. So pips are very simple. I'm just going to show you how to read pips and how to basically calculate them. I'm not going to go into depth on how pips were formed and what's the physical calculation about it. Listen, we live in a technological era where things have been made simple for us. So there's literally apps out there that make sure that you can calculate the value of a pip the way you want to. Okay? So let's look at this. Let's say, for instance, right over here, you decided that you're gonna buy, seeing that this thing went upwards like this, and you took your money right there. So you decided, listen, right here, when this thing got here, I'm gonna buy it and I'm gonna go up with it to go make some money. And you wanted to know if this thing didn't go your way, you obviously had to have a stop loss here. Right? So you'd have a stop loss here, and this would be your buy entry because you're making money going up. Buy entry, and this is your take profit. There we go. So from your buy entry to your take profit, there's a distance here in pips that you can calculate. So all you have to do is come here to your crosshair. All right, it's this thing. It'll appear like this, and then click from where your trade starts and drag it all the way down to where your stop loss is. And the number there in the middle, let's say it's 550. Let me write that down. So we're saying the distance between that is 550 pips wide, all right? But it's actually not 550, it's 55.0 pips. That's the distance between this and that. And then if I wanted to know how much pips are made going upwards, this would mean that I'd have to go from the entry all the way up to where my take profit is sitting. And then we've got 1289 pips. So that's 1289, which is then 128.9 pips going upwards. All right. Now, if I wanted to place a trade, I would have to either press buy or sell here. So in this case, I had to press buy. But there's a number here. I could have chosen the number that's 0.01. I could have chosen 0.02. I could have chosen literally 0.17, for instance. These numbers are the ones that would basically dictate how much money you make or lose. So let me show you, for example. So if you use 0.01 as a lot size, these are called lot size, guys. forgetting my own terminology. This is called lot size or volume. So it's one in the same thing. So if I use 0.01, this actually means that I'm going to be making roughly around 10 cents in dollars per pip. So it's like literally you moving this point from here to here, and that will give you the pip value of your trade. So if I pressed buy here using a 0.01, I would have made $12.89, and I would have risked $5.50. All right. Say for instance, I used a 0.06. This would mean I'm making per pip 60 cents in dollars per pip. And if you're using something like 0.26, this means you're literally making or losing $2.60 per pip. And if you're using 1.30, you're literally making or losing $13 per pip. Because all I had to do is literally move this comma here. And this is all for standard account, which is what we provide here at JP Markets. You're trading a standard account. So if you're using 0.01, you're literally risking 10 cents per pip. In our currency, that's roughly about 1 rand 40 cents per pip. So pip is money. So look at this. Let me whip up my calculator here. Come here, bad boy. So here's my calculator. So let me get rid of this. There we go. So I want to calculate this risk zone here. Go away. So I want to calculate how much I was risking here with this different lot sizes. All right. Now I know that we've got 55 pips from where I've entered towards my stop loss. And depending on which lot size I used, I've actually controlled how much I will be making or losing here. Calculator, where did you go now? All right. So we've got 55 pips in here of risk. And I've used a 0.01, which means 10 cents per pip. So all I have to do is multiply this by 10 cents. So this means if I used a 0.01, I could have lost $5.50 in this trade. What if I was using a 0.06? This means that 55 pips times 60 cents per pip is actually $33. So this is the same trade. That took the same amount of time, that took the same decision, and it's making or losing a different amount of money. So if I used a 0.06, I would have literally lost $33 in the same trade. This guy's losing $5. I'm about to lose $83. Let's keep going. What if I used a 0.26 in this distance? So that would mean 55 pips multiplied by $2.60, which is the value per pip. That means in the same distance of 55 pips, I could have lost $143. Same time, same decision, nothing has changed. Let's keep going. What if I use the 1.3? That would mean 55 pips multiplied by $13 a pip. That's $715. That's roughly 10,000 rand that you could have lost here if that trade didn't go well for you. So if you bought here and this thing just decided, you know, I'm going the other way and hit your stop loss, that's how much you could have lost, $715. All right. So the same thing works. If I had to calculate how much money I'm making going up there, all you have to do is then take the pips that you've made, which is 128.9 pips, multiply that by the pip value. So if you use the $13 per pip, put that there. And you could have made 1,675.70 cents in dollars. So you were risking $175. I mean 750, not 100. Oh my God, $715 to make 1,600. Right? Now, if your account is massive, this makes sense. This would make a lot of sense. But for someone that's literally using an account that's around $1,000 and you're about to place a trade that big, you're literally just hoping, you're gambling. You're gambling, because if that trade went against you, you're gonna go from $1,000 to $300 as your balance. That's 70% of your income or your deposit gone. Okay? So this here, this beautiful number here, this is your control in the market. This controls how much you lose and how much you make. So if you're trading and you don't understand that it's simply you taking your crosshair, which is your ruler, and measuring the distance, then taking that distance and multiplying it by the pip value, it will literally give you the risk before you went in. So I could have decided, you know what, I want to risk $10 in this trade, and I would have used a 0.02. Literally. 0.02, that means it's 20 cents per pip multiplied by 55 pips, that's $11. I already know I am not losing more than $11. It's pre-calculated, so I can sleep at night. It's as simple as that. Calculate your risk ahead of time. Go take the ruler and just pre-calculate the risk. And also, if you guys are still having problems, look what I did for you. Look what I did. So some of you already know the Telegram. So if you don't already know what Telegram is and you're not on it, I'll send the link so that you all can join, for those that haven't joined. So here under Forex training, which is my training channel, I literally put here, manage your trading risk with this Forex calculator. So if you click this link, it will literally take you to the calculator and you'll have the calculator do all this mathematics we just did with you. So all you have to do to the calculator is give it this number here, that 55 pips, this. So you just have to go and tell it, listen, my risk is 55 pips. What lot size should I use in order to only risk 10 Rand? Then it will do the whole calculation in reverse and give you the lot size that you have to use here. That's what I'm saying. I can't go deep into this. Okay? That's it from me and this session. I hope you guys enjoyed it. I still have time, like 20 minutes. So I wanna talk about those questions that I had coming in. All right. So starting with this one here, why does the trade start at a negative? All right. So that's simple. You get charged what we call spread in the market. All right. So if I just open this, show all my currencies. So yeah. So for instance, I'm looking here, let's say I want to trade this one. Yeah, Euro odd. So I'll open the chart, obviously. Control G. Let me just clear my screen real quick. There we go. So I've selected that I want to trade the euro against the Australian dollar, and I want to place a trade. So what we're talking about here is usually when you place the trade, it goes automatically into negative. So I'm going to put this here to show you what we mean by this. So as soon as I go on, still going down. So I'm just going to press sell. Do not copy me. I'm just illustrating. So I'm going to use a 0.10, which is roughly, remember we spoke about this, that is roughly $1 per pip. Okay, so that's what I'm saying here. So I want to make about $1 per pip on this trade, and I'm about to sell it. Sell. Okay, here's the order. You can see instantly it started around -$2 something. Right? So this is the question. Why does a trade start negative? Because you are paying what we call spread, guys. So if you click here on your currencies and you go and say, and you click spread, usually you'd find it like this. All you have to do is click on spread, and this guy will pop up. All right. So on odd or euro odd, I spend around 3 pips or 2. All right. So this is the cost for your trade. This is what you're paying the broker for making sure that your trade is executed. These are your bank charges, literally, in Forex terms. So I know that if I used a 0.01 and I'm literally going to pay roughly about 2 to 3 pips for this. This means if I whip up my calculator, where are you, bad boy? Okay, it's gone. All right, so I know here it's asking me for 2.9 pips. So all I have to do is say 2.9 pips. That's what I need to pay to the broker, first of all, before I even imagine my profit. And then I'm gonna multiply that by the pip value. So it's $1 per pip. So I should roughly start around -$2.90 on that trade. So obviously if I used the 0.01, I would have paid 29 cents for that trade and not $2.90. Okay, that is why each and every trade will start negative, because you have to pay for that trade. Right? I hope this has answered you. I'm gonna take this $2 loss because I haven't analyzed it, and goodbye. So I have a question here saying that how possible was it that this thing could have turned from here and went the opposite way instead of going up? And also, how do I know whether to put my money here? So like I said, I'm not applying any strategy here. This is all hypothetical. So if you want to have a strategy, you need to come to the Thursday class where we're talking about analysis and trading strategies and all of that. So here I was just making an example. I wanted to show you that before you enter a trade, you can literally pre-calculate your loss. All right. And by selecting the relevant lot size, you can literally earn like that. So you don't have to come here and throw a full standard lot because Tabo told you to do so and end up losing a lot more money than what you were supposed to. That's all I'm trying to say. All right. The market watch, this is where all the available instruments or currencies are sitting, guys. So what does it mean? This means I can go look, here's the NZD USD. So if I want to trade the New Zealand dollar against the United States dollar, I can just throw it on here. So the market watch is everything that JP allows you to trade. So if I want to trade the oil against the UK oil, I can just come here and do that. All right. If I want to trade Amazon, I can just come to Amazon and open Amazon and trade it. So that's the market watch, is where all your currencies and all your instruments that are tradable in this broker would be found. Link for Telegram, that's actually a good one. Bongani, trend line analysis as well. Okay, let me start off with you because you asked this first. So if you want to learn about trend lines, you can see that I already have a video on that. It's a whole hour. So all you have to do, get to Telegram, click on this video and enjoy it. Or go straight to the YouTube channel and go watch this video. Here I'll go in depth. I'll show you how to set a stop loss, how to cancel a trade, how to take 2 times the profit, all of that. So if you want to go ahead and go be in front and start knowing more, come to Telegram. I already even have last week's advanced class already posted there, as you can see here. All right, advanced class 23 May, that was last week. So if you want to learn and start trading, this is where you move from. So after this class, you're free to come here and start learning about strategies and how you actually make money in the market. So let me look for more questions that I received earlier here. So how do you identify strong support and resistance? Go watch that Thursday's video, the 23 May one. That will give you an idea of how to identify strong support areas and strong resistant areas using the relative strength index. I'd like to know about margin and why you needed to trade. So guys, margin is, if you come here to the terminal, if you look here, you'll see margin, free margin, and all of these funky numbers here. So I don't want you to look at this and think about margin that way. So I want you to close this and look at margin this way. So if I'm about to, let's say now I have a $100 account. All right, so this is my account balance for now. Okay, and this trade is literally asking 55 pips from me. Okay, this means if I use the smallest lot size, which is a 0.01, I would possibly lose around $5.50, which is 5% of my $100. So I know that already 5% of my margin is used up by this trade. That's what it means. So if I have $1,000 instead of $100, and I still use the same lot size, which is 0.01, because it doesn't change, I'm only gonna lose a 0.5% of my money. So that's less than a percentage. So to me, I've got a lot of margin for this trade if I use 0.01. But someone with the same trade, but their account is less than mine is, this requires a lot more margin from them because it's gonna take a whole $5. So imagine, this is all I'm saying. So we could both possibly lose $5.50 for using a 0.01 in this trade. Too big, shrink, buddy. There we go. Okay. Now, $5 to this guy is 5.5% of their balance. So their margin is weak. And listen, this trade took, let me see, it started here. It took 11 hours to conclude itself, basically. So in 11 hours, this guy could have possibly lost $5.50 or made that money. This guy would have done the same thing, but how it would have affected the two accounts would be different on the statement. It would show as if this guy is a high risk trader while this guy is a calm trader just because he has a bigger balance. So that's all it means. So I don't look at these funky numbers because before I enter a trade, I know exactly how much I will lose if it happens. And I get to choose how much I lose because I control this number. I don't enter the market by mistake. Ah, damn, I put a 0.50 by mistake. No. Know what that number means and how it can affect your account. That's true margin. Okay, Then the last question I have here states, how do you choose a stock to invest in? My best advice would be find a strategy. Okay, unless you already have a favorite stock or whatever, people usually trade what they like. So if you hear about oil a lot and you hear about gold a lot, usually you're gonna end up trading those. If you're gonna hear about Bitcoin and all of this a lot, you're gonna end up trading those. All right. So choosing a stock or a market to trade in should not be a problem. All right. The real question here should be, what strategy should I use to trade? Do you have a strategy for your market? So if you're going to trade cryptocurrencies, what strategy are you applying? Have you tested your strategy? Okay, so it's all about strategy. So I'd rather have you give me a currency pair that you say, you know what, I'm really interested in this country and I read about it a lot, and I can see that I can find a lot of information about trade setups and all of that on this specific stock. You know, so I think it's a good stock to trade. Then all you have to worry about is your strategy. Is your strategy giving you entry points? Is it making sure that you're applying your risk management well? All of those things, that's what counts. The stock doesn't count, because you can find an equal opportunity or a better opportunity on another stock or another currency. So choosing a currency is not really important in my perspective. I think having a strategy and a way around that currency and how you're going to maneuver yourself within that trading environment, that's what counts. Then you can go trade whatever you like and stop feeling FOMO. Stop feeling like you're missing out. Trade what you have, trade your book, what you want to look at, what you want to reap from. So that's my advice. Let's work on the strategy. I know most of you have read books and all of that. All I'm saying is that bring that strategy. Come meet me, come to Santon, come have a one-on-one with me. Bring your strategy here. I'll give it a look and I'll tell you where you're messing it up or what you should change and what you should add. So I've used a lot of indicators and a lot of systems. So I got to learn how to actually turn any trading system and make sense out of it. So I can look at a trading system and literally make sense out of it, and I could improve. I can show you how you could improve on the returns you're making with the system. So usually you don't even need to change your trading style. You need to change your trading psychology. So the link, thank you for the reminder there. Send it to Kenzo, copy. So I just sent everyone the link. The link will take you into this channel here. So if you wanna get into the other channels like the trading platforms, your Forex training, your introduction into Forex, just scroll all the way up into this channel, and this will take you to the Forex training channel. This will take you to the trading platform channel. This will take you to the Forex Insider, which is your beginner's material. And this will take you to account management. So if you're struggling with making deposits or withdrawals, this is where you're supposed to be. And I've got the locations for the office. So I work here in Hellenham Office Park, right here. Okay, so if you want to find me, here's the location right here. Right, so we do have a lot more branches, but I've only put up the Gauteng ones for now because that's how far I can go for now. So as soon as I start classes in Durban, in Cape Town, in Polokwane, I'll start putting up the locations here as well. All right, and yeah, there's much more to go look at. Okay. Yes, Thursday, same time, same link. Nothing has changed. Nothing has changed. And I'll see. I don't even know what I'm going to talk about on Thursday, but it has to be good. There's a lot of things in my head. I'll get it out somehow. So far, is everyone happy? So yeah, guys, I'm still around. Holler at your boy on WhatsApp. I think you all have my numbers. I'll just send them out just in case some of you don't have it there. There you go. So let's have a talk on WhatsApp. Tell me what you struggled with, and so that I can improve. So I learn a lot from you guys. So you shouldn't be afraid of me. So talk to your boy. Tell me your situation. Let's talk it out. I think I'll be open until, let's say 7, because it's like 6 now. It's like 4 minutes towards 6. So we'll have a chat and we could send me voice notes. I love voice notes. And keep practicing. Before I forget, there's also one thing I also wanted to show you guys. Here's a very important website that I think every trader should have. All right, so this is called TradingView. This is the social media for all traders. Okay, this is the social media for traders. So if you don't know how to trade and you're looking for like advice and trading ideas from market experts and people generally that are trading, this is where you come. This is my Facebook. Say for instance, right now I want to know, or I want to have an idea of how, let's say GBP USD, how it's gonna perform. So I'm gonna come here, type that in, and then here where it says ticker, I want trading ideas or educational ideas, whatever you're looking for. So I'm looking for trading ideas. So all I have to do is search. And it's gonna go look for all the ideas and in the order of the time it was posted, giving me ideas of what people are looking into doing using the GBP USD. So when you ask me which stock to invest in, this is exactly what I mean. When you know how to trade and have resources, that wouldn't matter because you're gonna trade what you like anyway, when you want to. So I'd come here and I see here this guy wants to GBP and he wants to go long, which means he's going up with it. And I can just open his idea, all right, and see what his idea is. He wants to buy from this because he's calling it the buy zone, because he's seeing some support here, all right, and he's saying he's gonna buy this from this support to that resistance here, all right. That's not a bad decision. I think I might have also done the same. So you can also press play here like I just did, and it will show you how far he is with the trade. So since buying here, he's still in profit, but we haven't gotten the, so that's fine. This trade is still takeable if you're gonna follow this guy. And on the same thing, 21 hours ago, you had someone else that says that this thing is still gonna go down up to the 1.26, and they're using harmonic patterns. This looks like a Safa pattern here. Okay, so as you read up and you start learning more about Forex, the language doesn't change. We all speak the same language. Support, resistance, head and shoulders, nothing really changes. So once you are intact with your knowledge and everything, this is a very powerful tool for traders, because you can always get trading ideas and see where people are literally where people are trading and what they're trading. So this is a beautiful platform. Okay, so this is my last advice. Go look it up, go look at the strategies, learn the names, come back to me with them and tell me that, listen, I'm very interested in moving average type of trading. Can you teach me how to rather trade that style, and I'll help you out, because I've tried them all and they all work. Honestly, all the trading systems work. It's just your psychology. You need to trust your system. It all boils down back to trust and making sure you're consistent. Okay, so someone asked for the numbers again one more time. They coming through. There you go. Facebook page. No, I don't do Facebook. I do have a page that I never update. I'm not a Facebook guy. I love trading, man. So my social media is literally my YouTube channel. So this is the channel I'm talking about. So everything that you find on Telegram, you'll find it here on already posted on YouTube, basically. So yeah, I don't do social media, not yet. Listen, I'm a teacher. I don't want to be confused for there's guys that don't really trade out here and claim to trade. Okay, so I don't want to be that guy. I want to live my life. I'm trading because I love it, and it's really improving my lifestyle, and this is my way of life. You know, I don't hear engineers walking around telling me, hey, I'm an engineer, I'm making so much money, look at my car, look at my house. You know, I don't see doctors doing that. And these guys are people that are making tons of money. So I want to treat Forex with the same respect. Okay? I want to treat it with the same respect. So Facebook, Instagram, all of that, you will find me, but I'm very low key there. You know, just keeping the reputation intact. All right. So yeah, guys, thank you very much. That's it from me. I'm your boy. I'm out. Telegram link one more time. One more time. And that's it for me. Your boy is out. It's a pleasure, guys. Thank you so much. Thank you so much. Ooh, you guys make it worthwhile, hey? You make it worth it. Thank you, guys. Thank you.